Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and basically we are doing the banking awareness part of it. Okay. Since last few lectures, basically we have been, sorry, not we are, we have been discussing over the insolvency and the bankruptcy board of India, right? Insolvency and the bankruptcy board of India. This is the topic we have been discussing upon, which is in short known as the IBBI. Okay, we have covered some topics like we had seen the introduction part, we had seen the background, we had seen the establishment, the objectives, regulation, insolvency professionals. Okay, insolvency professional agencies, information utilities, and the advisory role. We had covered these topics so far. What we are left with? We are left with the collaboration, CIRP, the education awareness, and the summary. Okay, so these four topics are left, which we will cover in this lecture only. All right. So I hope that you have revised the previous lectures in a well effective manner, so that you are now able to connect all the points and facts and figures which we are going to start in this lecture with the facts and figures and the points we had covered in the previous lecture. Okay, so with this note, let's start this lecture, and here we go. All right, so as we know that so far we had completed the IBBI, okay, established under the section 188 of which one? Of the IBC code 2016. Okay, it is an apex regulatory and advisory body, okay, in the field of insolvency and bankruptcy. Okay, this is what we have seen. Right now, if we start the collaboration, why the collaboration is necessary, let me give you an overview first, then we will go ahead. Okay, so basically if we talk about the particular field in which the IBBI having the responsibility is the field of insolvency and the bankruptcy. Okay, this is the field, but we know that the insolvency and the bankruptcy field is not alone. Okay, whenever we have to make any policy and set of rules, guidelines, and whatsoever for this one, it is not possible that we have to deal with this field and this field only. There may be some other fields involvement also, like the legal field, okay, like the business field, okay, like the financial field, okay, thereafter like the economics field, okay, like the banking field, okay, and like you can say political sphere. Okay, so these are some of the fields which having their you can say relevancy with the insolvency and the bankruptcy. Okay, which means that if you have to deal with the insolvency and the bankruptcy, then collaboration with all these fields and the stakeholders of that particular fields are required, because without collaborating you could not ensure the coordination. Okay, so collaboration is a vital aspect of the functioning of the Insolvency and the Bankruptcy Board of India. which we short known as the IBBI. The board actively engages with various stakeholders, including the regulators, governmental agencies, international organizations, to foster cooperation and promote the best practices in the insolvency and the bankruptcy domain. Okay, regulators, it means that if we talk about the fields like the legal, like the economic, banking, finance, whatsoever, all of these fields having their own regulators, all of these fields having their own government agencies engage with them. All right, and because we require all these kind of things for only one thing, which is known as the ease of doing business, right? For this one only, we are doing all the things. Okay, and ease of doing business is an international comparison index. So that's why cooperation with the international organizations are also you can say required, so that we could foster the cooperation and could promote the best practices in the insolvency and the bankruptcy domain. So in cooperation, we have the cooperation with the regulatory bodies. What do we mean by this? Let's see. The IBBI collaborates with other regulatory bodies in India, like the Securities and the Exchange Board of India, because if we talk about the insolvency, basically what we have talked about the assets, we had talked about the liabilities, and totally we had seen that when the assets become lower than the liabilities, or you can say when the liabilities surpasses the assets, this is the case of insolvency. Okay, and to settle out the liabilities and the asset tension, what we do, we basically reduce the insolvency by making the company bankrupt. How? By liquidate the assets to discharge the liabilities. Okay, so because if we talk about the liabilities, then we have to talk about the creditors, and the creditors are basically the shareholders and the investors. And we know the shareholders and the investors are basically deal in the field of the securities, and when the securities included, then it means the coordination with the SEBI, and you can say the Securities and Exchange Board of India is must required. Okay, similarly, because the liquidation of the assets are in the form of the monetary terms, so it means the banking and the financial institutes are involved automatically, and whenever the banking and the financial institutes involved, it means the RBI will get involved by itself. Ministry of Corporate Affairs is responsible. Why it is responsible? Because it is talks about the corporations, businesses. Okay, so it means the Ministry of Corporate Affairs is also a valuable player of this particular area. Got it? These collaborations are aimed at aligning regulations and ensuring that the insolvency procedures are consistent with related financial and the corporate laws. Because if we see about the SEBI, okay, having its own rule, RBI having its own rule, corporate laws are different. Okay, all of these agencies are different, but the field in which they are working are the fields which are aligned, right, with each other. It means that if any law and the act made for the field which is aligned, it means that the aligning should also be ensured in the rules and regulations, and you can say the guidelines are being set up by the SEBI, RBI and the corporate laws. Okay, so these collaborations are aimed at aligning the regulations to ensure that the insolvency procedures are consistent with related financial and the corporate affairs or the laws. Okay, so that all the laws, regulations and guidelines being set up by different authorities must be aligned in a proper manner. Coordination with these bodies help in resolving overlaps or conflicts in the regulatory frameworks, ensuring that the insolvency process is streamlined and effective. Why? Because if we talk about the particular fields, like we had discussed the legal field, thereafter we had discussed the business, the economics, the banking, the financial, or you can say at last what we have left, banking, financial. Last field is, what is the last field? Banking, financial, and the political sphere. Okay, so if we talk about these fields, then what do you mean by it? Basically, we mean if the company XYZ is going to be liquidated, or you can say it's going to be transferred from the process of insolvent to become the bankrupt. If this process is going to be organized, then we have to make sure that all of these fields will be aligned together so that no field will be disrupted, and thus we could ensure the streamlined and effective conduction of the process. If any of the provision of any of the field is get disrupted, it means that a process of insolvency to the bankruptcy will be also disrupted. Okay, so that's why coordination with the regulatory bodies and the organizations are necessary. Governmental agencies. IBBI works closely with various government agencies, including the Ministry of Finance, the Ministry of Corporate Affairs, and the Department of Economic Affairs, among others. Okay, first is the Ministry of Finance. Ministry of Finance, the Ministry of Corporate Affairs, and the Department of Economic Affairs. These are the three main governmental agencies. Please write down their names. Okay, maybe the question asks you Ministry of Finance, Ministry of Corporate Affairs, thereafter Department of Economic Affairs, thereafter Ministry of Shipping, for example. Okay, the question asks how many of the options the IBBI work with? Only one, only two, only three, only four. This type of questions often come in the examination. Like, how many of the following options are the governmental agencies with which the IBBI work? Only one agency, only two agencies, only three agencies, only four agencies. If you look at this picture, the Ministry of Finance, the Ministry of Corporate Affairs, the Department of Economic Affairs, is there anything like this one? Ministry of Shipping, is there anything? No. So 1, 2, 3, that will be the answer. Got it? So that type of questions are often asked in the examination. These collaboration help in ensuring that the insolvency and the bankruptcy policies and regulations are in sync with the broader economic and legal objectives of the government, because all these agencies, whether it's a finance ministry, whether it's a corporate affairs, whether it's a Department of Economic Affairs, all of these having their own domain, which domains are separated but aligned together. So when we talk about the IBBI, which is generally doing the work for the insolvency and the bankruptcy processes for three main, you can say, the prospectors, the individuals, the businesses, the partnership firms. So all of these are also somewhere working under the interest of these, you can say, governmental agencies. So that's why the alignation and the collaborations are very, very important. Joint efforts are made to address the systematic issues promote the economic growth and enhance the ease of doing business in the India. Please remember, it is the main aim behind doing all of these things. International organization collaboration. Collaboration with the international organization is critical to align Indian insolvency and the bankruptcy practices with the global best practices. Because as I have told you, the ease of doing business is a global scale. It is not limited to the India or the one country only. Okay, then the IBBI engages with the entities like the International Finance Corporation (IFC), the World Bank, and the United Nations Commission on International Trade Law (UN-CITRL) to learn from international experiences and to share India's insight. Now, we had seen the domestic agencies. Now it's time for the international agencies. First is the International Finance Corporation. International Finance Corporation (IFC), the World Bank second, United Nations Commission on the International Trade Law (UN-CITRL) 3. These are the three main you can say stakeholders in the international organization and trades to learn from the international experiences and to share India's insights. Okay, by participating in international forum and conferences, the IBBI contributes to the global dialogue on insolvency and the bankruptcy, promoting harmonization and the cooperations. Harmonization and the cooperations. Got it? Cross-border insolvency. What do you mean by it? Let's see. The cross-border insolvency cases often involve coordination with the insolvency regulators and authorities from the other countries. Maybe, suppose if we talk about the company A, maybe it's having its branch in the USA, in the Russia, in the India. Okay. Company is being registered in India, it means that company will be of Indian origin. But when we're talking about that it's having its business in the USA and Russia, it means that its assets also lies in the USA and the Russia respectively. Which means that when the company will become bankrupt in India, we have to deal with the USA and Russia also so that we could liquidate the assets persist in these countries. That is known as the cross-border insolvency. Okay. The IBBI collaborates with the foreign regulators and insolvency professionals to manage the insolvency cases that have international dimensions. Got it? Because when we talk about the foreign regulators and the insolvency professionals, okay, it means when we are going to liquidate the assets in their country, what do you think? They will allow you to come and liquidate the assets? No. They will make sure that the foreign regulators and the insolvency professionals must get involved in the process with you so that they could also ensure their own interest. This collaboration ensures that the interests of creditors and the stakeholders across borders are protected and that assets are distributed efficiently. Okay. Capacity building and training. The IBBI collaborates with the educational and the training institutions to enhance the skills and knowledge of insolvency professionals, insolvency professional agencies and other stakeholders, which we had already seen in the previous lectures. This includes partnering with the universities and institutes to offer courses and training programs in insolvency and the bankruptcy. Training initiatives help building a more competent and the professional workforce in the field of insolvency. That is also we had seen in the previous lecture. Knowledge sharing and the information exchange. IBBI actively participates in knowledge sharing initiatives, seminars, workshops and conferences related to insolvency and the bankruptcy. This includes sharing best practices, insights and case studies with domestic and the international stakeholders. Alright, basically if we talk about the particular knowledge sharing initiatives and the seminar and the workshops, whatever you can say, okay, so basically it is doing for the sharing of the best practices. because it is not possible that if we talk about the IBBI, then IBBI having all the effective measures, or you can say all the effective and efficient measures in the field of insolvency and the bankruptcy. It is not possible. Okay, so it means we have to deal with the other perspectives also, so that what we have we could utilize, what we don't have we could acquire. Okay, by facilitating the exchange of information and experiences, the IBBI contributes to the growth and development of the insolvency and the bankruptcy ecosystem. Okay, policy harmonization, collaboration with various stakeholders, both domestic and the international. Collaboration with various stakeholders, both domestic and the international. It is aims to harmonize the policies, procedures, and the regulations to create a more consistent and the efficient insolvency resolution process. Okay. Consistency in approaches can lead to better outcomes for all stakeholders and enhance the ease of doing business, which is our ultimate aim. Thereafter, corporate insolvency resolution process, CIRP, it is very you can say important and very easy also. The corporate insolvency resolution process is the fundamental component of the insolvency and the bankruptcy code in India, like how the corporate will get the insolvent during the insolvency process. This insolvency and the bankruptcy board of India plays a pivotal role in regulate and monitoring the CIRP to ensure that it is conducted in a fair and a transparent manner. Okay. Like in the previous lecture also, I had told you one thing in a straightforward manner. Like you could say, suppose if this is an IP, this will be an IPA. This will be the IBBI. Okay. Whatsoever the IP will do will be communicated to the IBA. IPA will be communicated to the IBBI, and IBBI will directly take over the reaction to the IP, right? So IP is appointed to liquidate the assets or to carry out the insolvency process of the corporate called XYZ. Okay, so what he has done during the process, it should be as per the corporate insolvency regulatory policy, CIRP. Okay, thereafter whatsoever he has done will be reported to the IPA, then IBBI. IBBI will review that whether the things which had been done by him as per the CIRP or not. If not, then as I have told you, disciplinary actions and some other serious consequences could be taken off. Okay. The CIRP begins when a corporate debtor falls on its financial obligations. It means that when the asset value goes down and the liabilities goes up, it means right now the debtor is not able to discharge the liabilities. IBBI plays a role in the initial stages of the CIRP by regulating the process of filing insolvency applications by financial creditors, operational creditors, or the corporate debtor itself. Okay, it means that if the company facing the situation in which the assets are lower, the liabilities are higher, so they could file the insolvency application, whether it will be found by the creditor, operational creditor, or the debtor. Okay, but how the things should be done, it will be monitored and regulated by the IBBI, or you can say the Insolvency and the Bankruptcy Board of India. All right. The IBBI is responsible for accrediting, registering, and regulating the insolvency professionals who may act as a resolution process during the CIRP. Like first, when the application will be filed, whether by the creditor, the operational creditor, or the debtor, in the situation when the company's assets are lower than the liabilities. So after accepting of the, you can say, the application, the resolution professional will be appointed. Okay, who will be the IP insolvency professionals. Okay, so who should be appointed as the insolvency professional in that case? That will be accrediting, registering, and will be regulating by whom? By the IBBI. Okay. RPs are critical to the resolution process as they manage the affairs of the corporate debtor. The IBBI ensures that the RPs are competent and adhere to the professional and the ethical standards. Okay. The IBBI monitors the entire CIRP process to ensure that it is conducted transparently, efficiently, and in compliance with the provisions of the IBC and the related guidelines. Okay, this is what we had already seen in the, you can say, the previous lectures, that the IBBI having the ultimate responsibility to ensure that the rights of all, whether it's a debtor, whether it's a creditor, whether it's a stakeholders, must be protected during insolvency and bankruptcy. Got it? It oversees the actions of the RPs, reviews the progress of the resolution process, and ensures that the rights of all stakeholders are protected. What we have just seen right now. Okay. Thereafter, Committee of Creditors, COC. IBBI plays a role in regulating the COC, which comprises financial creditors and has a significant say in the resolution process. Like as I had told you in the previous lectures, there are always two plans, Plan A, Plan B. The IP which has been appointed for the resolution process will be worked on two plans, Plan A and the Plan B. Plan A will be for the restart or survival of the business, like how the business could be survived. Plan B will always for the liquidate, or you can say wind up of the business or the assets. Got it? So both the plans will be presented to whom? Will be presented to the creditors, but in the form of committee of creditors, like whosoever. Suppose in our example A, B, C, D, E, these 5 people will be the creditors. So all these will be combined together and form the committee which we call as a committee of creditors, to whom the Plan A and the Plan B respectively will be presented. Okay, and this committee will be regulated by whom? IBBI. And now it's depend on the ABCDE or the committee of creditors whether to approve the Plan A or the Plan B. Got it? The board ensures that the COC operates in a manner that is fair and compliant with the RBC. The IBBI may issue guidelines for the functioning of the COC and promote its transparency. Fairness and the transparency. The IBBI takes measures to maintain the fairness and the transparency throughout the CIRP. Includes the setting standards for the conduct of RPs, adherence to the timelines, and communication with the stakeholders. Got it? Also ensures that the information about the CIRP, including the corporate debtors' financial status, is available to all stakeholders so that they could make the informed decision about the Plan A and the Plan B. Okay, IBBI is involved in reviewing and approving the resolution plans proposed by the resolution applicants, ensures that these plans comply with the IBC, protect the interest of all stakeholders, and facilitate the revival of the corporate debtor or efficient liquidation as appropriate. Okay. If the IBBI has authority to take the disciplinary actions against the RPs or other stakeholders who fail to adhere to the professional and ethical standards or violate the IBC. It means that whether it's a debtor, whether it's a committee of creditors, whether it's a IP, all of these becomes the stakeholders in the time of insolvency and the bankruptcy process. If any of them is not able to comply with the ethical standards or the professionalism, all of them will be punished by the IBBI. in the charge of violation of the IBC. This includes suspending or cancelling the registration of the RPs or taking other appropriate actions. This is for the insolvency professionals. Okay. Dissemination of information. The IBBI maintains and provides access to a database of insolvency and the bankruptcy cases. Information is valuable for stakeholders, including the creditors, debtors, and the public, to understand the progress of various CIRPs and their outcomes, so that they could remain updated throughout the process. Educational and awareness programs. If we talk about, IBBI conducts the educational and the awareness programs to promote a better understanding of the CIRP process amongst the stakeholders, because if they do not have a knowledge what is going on, how they will relate it with themselves. Okay, these programs help the creditors and the debtors to make the informed decision and participate effectively in the resolution process. Got it? Thereafter, what we have the educational awareness. The IBBI places a strong emphasis on the education and the awareness initiatives which are aimed at various stakeholders and the general public. Got it? These efforts are crucial for promoting the understanding and compliance with the insolvency and the bankruptcy laws and processes, because if they having the complete knowledge of the laws and the processes, like how the things could be done, so they could ensure their compliance with the ethical standards, the professionalism and all, and the things could be done in a proper manner. IBBI conducts the educational programs and the workshop for the stakeholders involved in the insolvency and the bankruptcy process. This includes the insolvency professionals, IPA, and the financial creditors, operation creditors, corporate debtors, and other parties. Please write down this. Whatsoever parties are included in the stakeholder education programs. Stakeholder education helps these participants understand their roles, their responsibilities, and rights in the insolvency proceedings, promoting a smoother and more effective resolution process. Training and the capacity building. If we talk about, IBBI collaborates with the educational institutions, universities, and training providers to offer courses and the training programs which are related in the field of insolvency and the bankruptcy. These programs aim to equip the individuals with the necessary knowledge and skills to become qualified insolvency professionals and enhance their understanding of the insolvency ecosystem. Capacity building and the training. Third part, capacity building is essential for the building of the competent workforce and promoting the professionalism in the field of insolvency, which is to be the required standard as per the IBBI. Awareness campaigns. IBBI conducts the awareness campaign to reach a broader audience, including the general public. These campaigns aim to raise awareness about the importance of insolvency and the bankruptcy laws, how they work, and the benefits they offer to the various stakeholders. Public awareness is crucial for dispelling the misconceptions and ensuring that the individuals and businesses know their rights and options in case of the financial distress. Got it? Publications and the information dissemination. The IBBI publishes the information materials, guidelines, and the reports which are related to the insolvency and the bankruptcy. These resources are made available to the public and the stakeholders to provide the insights into the legal and the procedural aspects of the insolvency process. Okay. So students, basically, right now we have the summary part. The Insolvency and the Bankruptcy Board of India. It is basically established on the 1st October 2016 under the Insolvency and the Bankruptcy Code 2016 IBC. We had just seen in the starting. Key regulatory body overseeing the insolvency proceedings and the entities in India. Okay. Primary functions include the regulating insolvency professionals, insolvency professional agencies, and the information utilities related to the insolvency profession. Okay. Also develop and enforces the rules and regulations governing the insolvency procedures, aiming to enhance the efficiency and the transparency of the insolvency resolution process in India. So students, basically in this lecture we had done with the IBBI. Okay. In the next lecture we will start some other topic. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and say thank you.